But let's go over the wave patterns this morning. And we had a corrective wave and a motive wave this morning. And if we look on crude oil with the 3-sim Renko, there's only one setup that we need to do off of the small retracement time frame, and that is a motive wave or a corrective wave. You should only be trading the small retracement waves, meaning the 3-sim Renko chart. That's our small retracement wave Renko bar, and you should only be trading it with market profile breaks, and that's it. And we all know that right across the board. So if you look at this one on crude oil, it's a very simple setup. When you break down through LVA, this is the only time you should be trading the small time frame. Remember, we have two time frames. We have the 5-sim Renko and we have the 3-sim Renko. The 5-sim Renko, we were 5 for 5 yesterday on that one as far as in the morning session, the early morning session. And that produced some really big moves based upon the larger time frame. So if you look at the 5 versus the 3, I'll show you yesterday's action real quick on crude, and I'll show you how you take trades. Every single one of them, 1, 2, 3, 4, 5, 6 trades in a row for the morning session. Started at midnight all the way through, and we just nailed every single one of them with a Jaysignal, depending if you were an early morning trader or a New York trader. You got some real big moves. We actually had one 7 for 7 that was 8 for 8 yesterday on the 5-sim. And I want to go over this real quick for you. I want to touch base. When you get 2 double triangles on the 5-sim Renko, it happens a lot on gold also, is that when you get 2 double triangles, meaning this is our entry bar, if you see that, that is called a major imbalance. That's a major imbalance in the market. Look for a huge move. So if you see that on any markets right across the board, whether it be a smaller time frame or larger, I love it on the larger ones. This is a major imbalance when this happens, when you have 2 triangles that post together. That told us yesterday at 10:30 with the crude oil inventories, after crude oil inventories, that's a huge opportunity. It went down from 60 all the way down to 90, $700 trade potential in less than 9 minutes. Is 8 minutes, 8 minutes it went down that much because of the dual triangles. I made it so if there's a major imbalance, you're going to see dual triangles pop up because this is our entry technique. So when you see it, or you know our large time frame, the 5-sim Renko is gorgeous. Here's all our trades yesterday for midnight. I mean, the accuracy was just phenomenal. 1, 2, 3, 4, 5, 6, 7, 8, 9. It actually had nine setups in a row that worked on the retracement. 9 of them in a row off the 5-sim Renko. Okay, but when you see a double arrow, come up, okay, know that there's a major order imbalance. It's our entry technique right when the arrow pops up. I mean the triangle. Be aware of that. I know we go over it in the room all the time. I got videos on it, but be aware if you see double. Some of you in the chat room, I went back and saw a lot of you guys got on that trade. So good job. That's a big move, really quick. 60 all the way down to 90, $700 trade potential per one contract in a matter of 8 minutes. Okay, so that's the type of opportunity we get on the 5-sim. The 5-sim is a lot different than the 3-sim, guys, and you have to be aware of that. The 5-sim are deeper retracements. They're around 40 to 60 tick retracement, right? And then we get the fib set up, the arrow, then the triangle. With a 3-sim Renko, we can't take all retracements, okay? Here's the difference. If we look on the 5-sim, look at this. We had no shallow retracement here on this big move down in crude oil. No shallow retracement at all, none. So that's why you want to use a 5 and a 3 together. But you can't trade the 3 at all unless you're now just breaking through LVA or breaking if you want to. You don't even have to even trade the 3. You can just trade the 5 if you want to all by itself. The reason I do it, I put them beside each other, is this, is that you can see in this big move down, we never had any deep retracements. So what happened was this morning in the market, it broke down and gave us a shallow retracement. And here's the only shallow retracement we got on the down move. When you see the market break down and it breaks down really hard on major volume, you're only going to get a shallow retracement. You're not going to get a deep retracement. So you take the first retracement short you see after the break of LVA. And that's all we do. All right. Does everybody understand the difference between the 5 and the 3 now? The 3, we only trade it with a break of LVA to retest of LVA on the first fib short or fib long. Is everybody on the same page with that? Where the 5 is just deep retracements, right? The 5 retracement. Are we on the same page? Give me a why. Members, we good? New members, trials. Everybody on the same page? You must know that. If you don't know that, you're going to miss trades because the market is not going to go straight up and straight down every day, right? So we got to know, and if we get in a hot market like this where we're going to go vertical on us, we can't just trade the 5, all right? So just be aware of why I use each one. I use the difference in the 5 and the 3. The 3 I only use on a break. If I look at the last gold trade, you know, the motive waves are the best too on the 3. You can see the 5-minute trend was down. So the motive wave, there's only 2 waves to know. There's a motive wave and a corrective wave. That's all you got to know. This is not hard. This is not something that you have to spend 18,000 hours on understanding a motive wave and a corrective wave. It's very simple with market profile. If it breaks LVA, got back inside of LVA. So my gold traders on this last trade, let me put it on the video so you see it. Here's my gold trade. You can see the motive wave was here because with 5-minute trend was down. That's a short, and this is a long. Why are you allowed to take that counter trend trade here? Why? Because it broke back inside of LVA, and I'm on my small time frame. You're allowed to take a corrective wave. There's your exact bar entry. I saw some traders in the room who got that trade. That's a valid setup. Even though the 5-minute trend was down, you're allowed to take that corrective wave because the corrective wave just broke back inside a market profile on your own Ninja charts. That suggested there's strength inside the market. That's not my opinion. That's not your opinion. That's telling you the internals of the market. We trade the internals of the market. Our opinions mean nothing, right? Traders are always wrong. The public's always wrong. And that's how we did it yesterday. That's how we did it today. That's how we do it every day in the room. Let the indicators set up the trade. Our opinions mean nothing. So if we get back inside of LVA, it teaches us my methodology that I teach you. It teaches you its strength. So take the first J signal long. If you get outside of HVA, I mean below LVA with trend, then you take it short. Okay? So that's exactly what we do, guys and gals, on corrective waves and then also on motive waves. The best motive wave you can have is with 5-minute trend. Motive waves are 5-minute trend and corrective waves are against 5-minute trend. And the easiest thing to realize is, remember this, if you're a Jaysignal leasee and you lease Jaysignal, I don't care what market you trade. We had a huge S&P 400 trades yesterday. It was unbelievable. The S&P 400 produced so many ticks yesterday on Jaysignal. We had like 5 or 6 signals in a row. It was nuts. It was absolutely nuts. It kept going down and down and down. And Jaysignal was so accurate. The Dow yesterday, the day before, was so accurate on the Jaysignal. And it was all based upon this methodology, though. If you're trading the 5 sim Renko, before I turn this off, if you're trading the 5 sim, you have to understand they're deep retracements. They're deep retracements. These are deep retracements. Okay? If you trade, you can take them. You can take all those trades. If you trade the 3, you can be very picky. You cannot trade the 3 unless you're just breaking through or out of market profile right here. Right here, the LVA or the HVA. And that's no matter what. Okay? And if you do that, if you make it simple, it's going to really help you in your trading because these trades are phenomenal. It's 1-for-1 again on the 3 sim this morning and 1-for-1 on the 3 sim on gold just by waiting for a market profile break on your own charts retest. And that works on all markets the same way. Cookie cut this in every market that you look at across the board. I don't care what it is. I don't care what you trade. It's the same setup. All right? So that's how we do it. But remember that double arrow on the 5 sim? I can't reiterate that enough. Remember yesterday, I cannot reiterate this enough. Let me show you one more time before I shut this off because I don't have a lot of videos on it. If you have it on your own system here, if you see a double arrow pop up right here, double arrows that pop up on Jaysignal, that's a major imbalance. Look for a quick move. If you get a double triangle and if it goes sideways, then just stop yourself out at a small loss or a small profit because there's not a major imbalance. but it should mark itself down on every bar. Mark down, mark down, mark down. You can actually trail it, or what I'm doing on these major imbalances, I'll look at the 5-minute highs, the 5 semi-circle highs, and trail it per bar all the way down. I'm trailing it all the way down through the highs right here until it closes above it. There's my close to get out at the end. You can actually trail it because you know you got a possible maybe 40 to 100 tick runner, and it could be within 10 minutes. It could be a $1,000 trade per one contract with a maximum $150 risk. So you got around a 10-to-1 reward to risk when this happens. We had it yesterday again. It's happened a lot in the market. So make sure when you get double triangles like that, really try to trail your position. I like doing the highs per bar, trailing it all the way down. Okay, so really good way to do it.